Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, back in town, back at the desk. We got 36 minutes to CPI, so this sucker's going to move. Up, down, probably both. But I want to hop on here. This is going to be short and sweet because you're going to have the tape before CPI and the tape after CPI. What we've been doing really for the last, call it 6 or 7, 8-ish sessions, is we've just been kind of leveling off here. We engaged. We did a little bit of an upper band ride. We've been back to test the 9-day. The 9-day has been holding up price for the last few sessions, and we've really been flattened out for most of the day, with the exception of a little run down, a little run up, but mostly, just flat into this report. So hourly chart, same deal. Weekly pivots 41.36.58. So let's run through two scenarios. I strongly recommend you do not trade CPI immediately after the number at 8:30. It hasn't been as bad as it was, say, 4 or 5, 6 months ago when you were getting 100, 120, like 3-minute candles. It's not, this report and no report is worth blowing up. And you catch this wrong and you can't get out, you'll blow your account up. So please don't be that moron, okay? That moron is out there. Don't let it be you. So somebody in 34 minutes, 34 minutes from now, by 36 minutes from now, they won't have a trading account anymore. Don't be that knucklehead, okay? So we've been riding weekly pivot. Let's say the ultimate reaction is to the upside. Fine. Great. Whatever. They've got to deal with the high from yesterday. Basically, call it 50, 51.75. They got to deal with the 41.50 area. Then bulls have to deal with this high from Tuesday of last week, 41.71.75. If the ultimate reaction is to the upside, you really want to see it if you're, if the bulls are going to take control of this tape and run it back up to the upper band and do another upper band ride, you need to close above 72 today. And you probably need to engage something pretty damn close to 4,200. Today, if you're really going to shake the tree and get a lot of these hopeful shorts out of the game, okay? Now, let's talk about a downside reaction. It's pretty much the same in the inverse. You got a lot of weak longs that want it to go up, that every time that thing gets up into 41.60, 41.70, 41.80, they get queasy, they puke it, and it comes back in. The problem is when the bears get down to 41.33, 41.34, they got nothing left. They have no answers. And when you get down to the roundy, Monday, Thursday, they keep dropping the ball and doing very easy dip buys and very easy dip buys. Stop doing that, okay? So what do the bears have to deal with? Well, the blue line here is the 9-day. The weekly pivot's locked up with it. It's all 36.37. 36.37 is your hinge price into the number. You want to be long above. You want to be short below. What you want to avoid are gigantic candles that are bisecting it for like an hour. You don't want to do that. Okay, so for the bears, short against 37 to look at taking out yesterday's low, 41.28.75. More importantly, 4,100. I don't want to hear about the bears and how scary the world is and all this other stuff while we're trading stuff with 41s on it. I barely want to listen to it when we're trading with anything with a 4 on the front of it. The bears have had so many opportunities to deal with 4,000 and deal with 4,100 every time for the last 3-4 months that they get down to anything with a 39. They do not look good. They do not look comfortable, and the thing pops. So deal with 4,100, deal with last week's low, and then we can talk about coming back into things like the daily mid-band. Let me throw the daily chart back up real fast. Daily mid-band, which is sitting right around 40, call it, 40.67. This is the number, bears, you need to get back to. And when you get there, you need to have enough left in the tank to convert it and bring in the tape. Can you do that all in one instant pop here at 8:30? Sure, depending on what the number is and what the market wants to do with it. But we're not making any assumptions, and you shouldn't make any assumptions either. So those are the key initial numbers off of any kind of a reaction at 8:30, okay? So we talked about weekly pivot, 9-day, 36.5, 37 and change. Volume weighted average price is locked up with the daily pivot at 39.5. You got the hourly mid-band, call it 40.75. Overnight range is really small, 12 and 3/4 handles. That's nothing. Okay, so 30 minutes until CPI. I'm going to get this out in your hands. Be safe. Don't blow up. Please don't be a complete moron. Okay, this is not the time to be ideological. Okay, the market has to do this or it has to do that because of whatever the hell you read. Please stop it. Trade price. Respect risk. Take profits. Let the good ones run. Cut the short ones and be willing to be wrong and immediately change your mind. If you want to learn how to do that better, come see us. All right. Have a fantastic day. Be safe. Be healthy. Take care. Trade them well. Talk to you tomorrow.